The $600 Rule Repeal, a return to sanity in tax reporting. 1. The rule that terrified everyone. For years, freelancers, small business owners, and anyone using payment apps like Venmo, PayPal, or Cash App were dreading the so-called $600 rule. It came from the American Rescue Plan and was set to take effect in 2026. The idea was simple: every user who received $600 or more through third-party payment apps would get a Form 1099-K automatically reported to the IRS. So what does that actually mean? It meant millions of ordinary users could have been flagged for taxes over things that weren't even income, splitting dinner bills, paying roommates, or selling a couch. The system was designed to catch tax evasion but ended up threatening to drown honest taxpayers in red tape. Footnote: the $600 rule under the American Rescue Plan dramatically expanded IRS reporting requirements to include small, non-business transactions. 2. The reversal. On January 4, 2025, Congress quietly hit delete. The new law repealed the $600 threshold entirely and reinstated the previous standard. Reporting only applies if users process over $20,000 and more than 200 transactions per year. In other words, normal people are finally off the hook. Freelancers earning modest side income, casual sellers, and anyone using apps for personal transfers can breathe again. So what does that actually mean? If you aren't running a legitimate business through your Cash App, you can stop worrying about mysterious 1099-K forms showing up in your mailbox. Footnote: the repeal restores the pre-2021 reporting thresholds, limiting IRS notifications to higher volume business users. 3. The fine print: you still owe tax on income. Here's where most people get tripped up: the repeal doesn't erase tax obligations. If you earn taxable income, even if it's under $20,000 and no form is issued, you must still report it on your tax return. The IRS doesn't need a 1099 to expect compliance. However, personal payments, gifts, and reimbursements remain non-taxable. If a friend pays you back for concert tickets or you receive a birthday gift via PayPal, that's not income. So what does that actually mean? You don't owe tax on friendship, just on business. Footnote: a Form 1099-K is merely a reporting mechanism. The underlying obligation to declare taxable income remains unchanged. 4. Real-world scenarios. Mike the freelancer earns $10,000 through Venmo gigs. Number 1099-K, but still must report $10,000 in income. Sarah the Etsy seller earns $18,000 a year through PayPal with fewer than 200 sales. No form, no mix-ups between business and personal payments, but income still reportable. Jamal the regular guy uses Venmo for dinners, sells old electronics, and does small jobs. Under $20,000 and fewer than 200 payments? He's invisible to the IRS reporting system, though still responsible for any real earnings. So what does that actually mean? The IRS finally drew a line between running a business and having a life. Footnote: the new reporting limits spare most casual users while keeping tax accountability for consistent income-generating activity. 5. Why it matters. The repeal isn't just about less paperwork. It's about restoring proportionality. The $600 rule would have turned ordinary financial behavior into bureaucratic chaos, and forced taxpayers to prove innocence over harmless app payments. By reversing course, lawmakers avoided overwhelming both citizens and the IRS with millions of pointless forms. The system can now focus on real underreporting, not who Venmo'd their roommate for pizza. So what does that actually mean? The IRS finally realized it's better to audit tax cheats, not dinner parties. Footnote: policymakers recognize the administrative and public backlash risks of excessive reporting, choosing to prioritize enforcement efficiency instead. 6. The practical takeaway. This repeal is a genuine win for taxpayers. If you use Venmo, PayPal, or Apple Pay casually, relax. If you freelance or sell goods, track your income honestly and report it on your return, even without a form. And if you make serious money online, separate business and personal accounts. Because while the $600 rule is gone, transparency and compliance aren't optional. So what does that actually mean? The IRS may have loosened the leash, but it's still watching the yard. Footnote: responsible record-keeping remains critical to avoid misclassification and potential penalties despite relaxed reporting requirements.